Hey everyone, welcome into another daily editorial here on the KE Report. In this daily editorial, we are focusing on some of the price action in the gold market and gold stocks. We will even touch on silver here quickly. I am chatting with Jordan Roy-Byrne, founder and editor of the Daily Gold. Now, Jordan, no doubt gold, GDX are in a bit of a correction phase right now. Let's start with gold. Gold has been more or less choppy for the last almost 2 months as it has moved sideways within a range of about 1675 the whole way up to about 1780, give or take a couple dollars on either end. But the last 2 weeks we have been trending a little bit lower and really fighting with that $1,700 level. Let's get some of your comments first and foremost on the price action in gold. Where do you see it going from here?
Well, you're right. Gold's in a consolidation. It broke that little downtrend line in May, and of course, all the polls were saying it's another breakout. But you have to break above certain levels to have a real breakout. You can't call just breaking trend lines, down trend lines, a breakout. But anyway, yeah, gold is consolidating, Corey, and I actually think we have to take our cues from the stocks. I know we'll talk about that, but the stocks are going to lead the metal. And so, what happens with GDX and GDXJ, that will play into, whether gold is going to hold, it looks like 1680 or so, that area. Gold could go either way, but I would take my cues from the rest of the sector and also silver, which is outperforming gold, which I know we'll get to. So I guess I'm going to have to say pass for now if it's a one-word answer, and we'll have to, take our cues from the rest of the sector as it pertains to gold. Because if the stocks are going to correct if they're going to correct more in price, then there's a risk of gold, breaking below 1680-ish. But if the stocks are not going to correct much more in price, then gold's probably going to hold that level.
Okay, let's talk about GDX then, because GDX from its peak not that long ago when it reached 37.49, that was on May 19th, GDX has already corrected almost 12%, and it is closing in on that breakout level that we were watching for, I think it was 7 years, right around that 31 or 32 level. And hey, we're closing in on some of the other technical features like daily moving averages that are sitting, in about the 30 to 31 region, also the lower Bollinger Band on the daily chart. What are you looking for here in GDX? It's already been a fairly large correction, but again, it is still above that breakout level.
Yeah, the breakout level is around 31, and I would not be thrown off even if GDX were to test 30. And I think you mentioned the moving averages. I don't have it in front of me, but I think the 50-day and 200-day, I want to say they're at about 29 or so by now.
200 days is 28.43, and the 50-day is just over 30. So right in around that level.
Okay, so I guess I was a little bit off. Looking back, Corey, if we look at where GDX and GDXJ peaked, GDXJ, this is textbook stuff because GDXJ peaked right at the 7-year resistance, right at the 2013 and 2016 highs. If we look at GDX peaked right at the 38, no, not 38, right at the 50% retracement of the entire bear market, right about 37 and a half. If you look at a 10-year chart or so, you can see there's some important lows, right at 37 and a half. There's one in late 2010, and then there's two in 2012. So these were areas where it was predictable that the market was going to stop, at least given how it's been trending in the last couple of weeks, without having more, really with GDX only having 10% correction. It was predictable that the miners were going to hit these levels and have some kind of correction. Now, if we look at what happened in 2008, which is somewhat similar to what's happening now. GDX grinded higher. It did have quite a few 17 to 20% corrections as it grinded higher. So I'm not saying it's going to repeat that exactly, but it's possible that GDX could correct, 15, 17, or even 20%. It might come all the way down to 30. That's in the historical precedent. It's good to see that in 4 or 5 days, GDX has come down to 32.5, and so it's very close to 31. GDXJ has come down to the 43s. I know it's bounced a little bit today, but it got down to the 43s. I know there's a gap there that it looks like it filled today, but there's also really strong support around 41, 42 for GDXJ. So it wasn't the time to buy a week ago, but magically, we've had enough damage where there's much better entry points now than there was a week ago. As far as, is this correction going to end in the next couple days? I'm not really sure. I think it's probably going to last at least several weeks. We could see some sideways action. I don't think we're going to see everything just magically rebound and run to new highs immediately. I think it's going to take a little bit of time. But with that said, Corey, we've already come down very, very close to those support levels. So buyers have to, we might bounce a little bit after today, but if we go below the lows of today, then that's good for buyers, and you want to get ready to buy that.
Okay, so overall, is it fair to say that at least right now this is a very normal correction and buy the dip opportunity in still a bull market?
Absolutely. GDX, Corey, like I said, it broke out, and now it's just retesting that 7-year breakout. That's textbook action, and GDXJ is just behind it. It ran up to resistance, and so it's consolidating before the next move higher. So if we're looking at GDX and GDXJ, this correction really could be the last correction before the market really gets going and really takes off.
Okay. Now, what do you see happening with silver, the relationship to silver? The argument has been that silver has been hanging in there, almost outperforming, but there's also that balance that we're seeing broader move in U.S. equity markets. So maybe this trade basing silver more on its industrial uses more than anything.
Well, I like to say silver is half an industrial metal, half a precious metal. And so when inflation expectations are starting to rise, and when there's optimism that the economy is going to rebound, and when the stock market is holding up or faring okay, that, relatively speaking, is much better for silver than for gold. So that's why silver is holding up better right now. You have to like the price action of silver. I like it more than gold. It's holding up better than gold. It hasn't corrected that much. So silver, it's got that really strong resistance in the 18s, and especially at 1850. So, we're coming up close to the end of the month. We'll see where the monthly close is. We'll see where the quarterly closes next month. I know that's about 4 weeks away, but those things will give us a hint if silver is going to break above 1850 and run to 21, or if it's going to stay below 1850 and consolidate. But given what's happening in the larger picture, if the stock market is going to hold these gains, that's definitely good for silver.
Okay, and that's a key distinction too, right? It's not that narrative of we need a crashing market to drive precious metals, especially when it comes to silver, because silver still is very much getting priced for its industrial uses. Jordan, are you mostly, it sounds like, discounting any sort of a major drop here, though? This is still just looking so much like a normal correction, as I said in the last comment, that you're not worried. You're not even trying to jump on the short side of things. This is still a bullish play.
Absolutely. We are going to make the most money buying and holding, buying the best companies and holding. Even the best market timers and traders, they would tell you the same thing. It's very difficult to trade in or out and, try and hedge. It's just, again, I go back to the setup in GDX and GDXJ. It's textbook long-term bullish the way they're acting. It's too risky to try and hedge and get out of your position. I'll say it again. We're going to make the most money by buying and holding the best stocks over time as they run up. Take some small amounts off the table. Sell the whole thing, but maybe sell a third, sell a half if it's really risky or if it runs up. That's the way we have to manage our portfolio as this bull market really gets going, I think, in the second half of the year.
Now, is there a sweet spot for best stocks? Does that mean build your portfolio around maybe a couple of the top majors, mid tiers, and juniors, or is there another allocation that you have in mind?
Well, that's a good follow-up question. I don't invest in majors. Looking at juniors, there's quality companies out there that I think you can still, it's still not too late to get into those. I mean, I have like a top 8, and those stocks are correcting nicely here, where people can get into those 15% cheaper than a week ago, and that's what you have to take advantage. But I will say this, Corey, when we start the next leg higher, and you see GDXJ breaking the 2016 high, it might get to a point where the high quality juniors, that they've already gone up too much, and then you'll have to go down to lower quality things, which they're riskier, but they're going to have a lot more upside. So I guess what I'm saying is, I don't want to say, well, this is your last chance, but if you're looking at like the top quality in junior land and things that can still go up 3x or 5x in the next 2 years, I think, this correction, and I don't know if it's going to last another week or another month or two, but this correction really could be your last chance to get into those things before they kind of run away and they get too expensive.
All right. Hey, we're going to wrap it up there. That is a very positive comment for all the precious metals investors. But remember, there are natural corrections along the way in every bull market. And this one actually has been pretty quick when you consider GDX dropping about 12%. Could still be a little bit more downside, but a couple, at least short-term levels for us to watch for a probable bounce here, and still a very bullish market. Jordan, appreciate your time. Thanks for sharing some of your technicals. I'll post a link to your website below. Have a great rest of your week.